Alright guys, so today I'm going to record a YouTube video about my portfolio and what's in it and also how much I've made this year. Thank you guys for watching and please don't forget to like and subscribe and also comment something. Thank you. So one important thing that I want to tell you first and foremost is Robinhood has free stocks, right? And if you guys want to sign up, I'll put a link in my description and you and I can get a free stock which is worth about $5. Once again, you'll see the link in the description. Okay, thank you. Alright, so I'm going to show you basically what I've amassed over a year. Over a year, you can see it right here, 44%, right? $11,752. Okay, so this right here, this was whenever the coronavirus first happened. And then as you can see, look at that negative number right there. My stocks went down negative 7,600. So I just want to show this so that way you guys don't think, oh, like everything went well for him. No, everything did not go well for me. I went like negative 7,000 the first couple months that I put money into the stock market, but I just wrote it out because I've already experienced something like this before and obviously reading some investing books. Now, that was in a year. All time, let's see, where's that number? Right there. Almost a 50% return. This whole period, don't count that. I didn't really know what the hell I was doing. But this is whenever I really started right here. Okay. Alright, so now let's go to my highest returning stocks or securities. Okay. First one, Dogecoin. Now I know it's funny. I originally bought this just to mess around, you know. It was only $10 and I was like, oh well. I started realizing the most that I was going to lose is $10, but if it went up way higher than $10, then I was going to win. Now, this had no financial analysis, not really much investigation. I just put $10 in this. Okay, my total return is 2,044%, which is basically like 20 times. And you can see there, total cost was $11.01, and my portfolio size right here, $236. Okay, now for my second biggest. This right here, where is it? SPXL. There it is. Okay. So let's see. 51 shares. I didn't buy this all at once. This was like over a couple, 6 months, I'd say. Now, the reason why I bought this is because it's leverage times 3. And I bought this whenever the coronavirus first started, like, tanking the markets. And I even sold my PlayStation 4 in order to get money at the time so that way I could buy this stock. It was crazy. I almost sold my computer, but if I would have sold it, I probably would have failed nursing school. So, let's see. Total return right here is 159%. Total monetary wise is 2,629, and then that's basically the portfolio size for this particular stock. Now, I'm waiting to sell this in about, I'd say, once it hits the year mark, so that way I can get taxed as a long-term investment. It's a lower tax bracket. Now, Dogecoin, I'm not selling that. I'm just keeping that till I die, basically, or till something happens that I just view Dogecoin is not a real good thing to invest in. And the next one is Neo. So originally I saw this company at $17.43, I think, but I bought, I'd say 10, and I was just waiting around and eventually I started buying more, but I wish I would have bought more whenever it was 17. Also, I ran out of money basically, and that's what you're gonna see in all these stocks. Like, the reason why I don't invest, well, I'd still invest, but I just keep running out of money, unfortunately. Alright, so let's see. Total return is 118%, so I basically doubled my money. And you can see total return right here, $1,825. And right here, that's $60. I'm holding this one 5-10 years, or unless the company starts having monetary money problems. Other than that, I'm holding this one for the long term. These are all long-term holds. Okay, now show you guys my exact portfolio. So you can see 1.85 shares of Microsoft, right? Quick click on here. See right there, return is 32%. It's a little more, but well, it's supposed to be a little more, but I just keep putting money in it every now and then. This is where the majority of my portfolio is right here. This is where it's mostly safe. You can see right here, market value 22,000. The percentage isn't the best of ROI, which is return on investment. So 3,800 and stuff, but it's basically, this is my, I guess, vault, you can say it. Like, this is probably the safest thing that I own. That's why the majority of my portfolio is in here. I just did that so as I was learning the market more and more, I would just eventually diversify myself. But I'm still in school right now, and I have learned a lot about the market. It's just I feel like I want to be basically a professional by the time I get out. Now let's see. This is a really good company in my opinion. Brooks Automation right here. Extremely good stock, in my opinion. Now, my return is 106%. It's $208. It's not that much. I get that. But I am going to pick up a lot more of this stock. They basically make, so they make microchips, and they also make stuff for cryo research, so like gene editing and stuff like that. And I bought that about, I want to say, a year and a half ago. See, equity residential. This is the only stock that I have that's down. Now I'm keeping this one because they're still making money, but it's just that they just have a lot of bad news associated with them. This is a real estate company. So now bots. You can see this is an ETF, which means that there's a bunch of different sub companies in this particular stock. And see return 73%, and it's basically, let's see, right there, robotics and artificial technology. I feel like that's going to be the future, and that's why I invested in it about a year ago. 3D printing. I am a huge fan of 3D printing. I feel like that is going to take over. 130%. As you can see, like, $81 isn't a lot. I should have put more into this company, but it is what it is at this point. Now, let's see. Uber, 9 stocks of Uber, 84% return. Now, I am holding this one until forever. The reason why I say that is, so Uber just basically sold their autonomous driving part, and that was the part that was hemorrhaging the most money for this company. And I feel like once that part was gone, basically they can cut down their expenses and they'll be in the green. And the green means they'll be making profit. SPXL, already showed you guys that one. Amazon. Now, you can see I don't have much in Amazon because stocks is pretty expensive, and I was originally going to buy one Amazon stock or maybe even two, but I just started realizing I was like, I'm probably better off just putting that stuff in companies that are up and coming that I think are going to succeed. Also, I do some research on these companies. It's not just like a gut feeling that I have. I do research on those companies that I think are going to succeed, and I figured I would have made more of a return on those companies than Amazon. Okay, so you can see not even a share of that. This is TQQ. This is just the leverage times 3 ETF. It has to do with technology. and I just track this. All right, so basically if you see anything less than a share, unless the stock is expensive, I'm just tracking it. Neo right here, I already showed you guys that. They make electric vehicles over there in China, and they're looking to expand in Germany. Lemonade right here, another company that I love. I hope this company starts doing car insurance. I will switch to them. And also health insurance. So basically what this company does is they use artificial technology in order to price insurance premiums. And if the pool of money that they have doesn't get used during that year, then they just donate that money to the charity of your choosing. And you can see right there the percentage return, also the money. And I wish I would have bought more, but again, I was working part-time during school. Only get snagged up 4.71 shares. RK, huge fan of Kathy Wood and ARK Invest. So RK is just, they invest in things that they think are going to be disruptor technologies. Disruptor basically means like, so the way that I can explain this is the car was a disruptor to the horse. It was just technology that was so good at the time, or that was developed far superior than the stuff that was available at that time. And it's just a bunch of general stuff for RK. Square, I just tracked this company. Overall return is $54, and they have to do with payments, kind of like the Cash App. Cash App is owned by Square, so if you use the Cash App, that's basically a part of Square. They just they do internet electronic payments, paperless payments, and they also help out small companies run a business. A buddy of mine, he was talking to me about Square basically taking almost $300 on a $5,000 job. Tesla right here. See, I want to buy more Tesla, but I don't know. It just has a crazy high valuation in my opinion, but I do feel that the revenue is going to explode within this next year. If the Cybertruck comes out, the Tesla Model S Plaid, and the two new plants that are opening, that is just going to like explode Tesla stock in my opinion. Or, well, I know it's going to explode their revenue. You can see I only have 1 point something stocks of this, 1.46, 3% of my portfolio. As you can see with some of these bets that I'm making, I don't put usually larger than 10% of my portfolio. So you see this one is 4% of my portfolio, and just because like in case this company goes bankrupt or something, or I can't be checking the markets 24/7. So what I do is I invest usually less than 10% or 5% depending on the company. This one I invested 2%, but it's just grown so much that it's 4% now. You can see right there, total market value of all my holdings in Virgin Galactic right here is $1,553, and total return is $774 right here, 99% return. And what this company has to do is Richard Branson, he has a space company, and that's basically space tourism. Like they have a reusable rocket and a reusable plane. Well, obviously a reusable plane, right? They just fly up into Earth orbit, and the tickets are about $250,000 for the first couple reservations. I think it's the first, I want to say 200, and then after that they're going to be 300,000. So this right here, this is one of my favorite stocks. As of right now, they haven't flown anything, so it's also one of my riskiest stocks in my opinion. But I do feel that they're going to be successful. That's just a feeling. Obviously, I do research like their test flights, dates, and stuff like that. They keep it getting pushed back, but I'd rather them getting the test flight pushed back than like something horrible happening, and then the pilots are dead, and also this stock is just disappear into nothing. Okay, now Intel right here, one of my favorite ones also. Intel, as you guys know, they make computer chips. They're also working with Neo and producing their autonomous driving technology, which is why I bought them. Well, that's part of the reason. Also, the other part of the reason is their PE ratio, which is how expensive they are compared to the market. They're a really cheap stock. So once again, I would have bought more, but I don't have any more. Well, I do have more money to invest, but it's coming in slowly until I graduate. 1.9 shares, 29% return. I saw everybody running away from Intel. I don't know why they were running away. Everybody was going after AMD, which is another chip making company, and I saw that Intel had a way higher chance of succeeding than AMD. Also, Intel has so much more revenue than AMD. Okay, ARCG right here. I will be ramping up the number of shares that I have shortly, as soon as I graduate and start working, because I just feel like this stock right here is going to explode within the next 5 years. I do believe that this is going to be real. Well, it is real right now, but I do believe that it's going to become a lot more affordable. So basically what this is an ETF again. There's so many stocks under this. And what this deals with is gene editing. So like, let's say if you have in your genes that you're going to develop cancer by the age of 60 or 65. So there's something called CRISPR, right? And it's able to edit genes. So if you want that out of your genetic code, then they can go inside. Well, in the future, they will be able to go inside, take that gene out and replace it with something else. Replace it meaning like you won't get cancer. And that is super crazy. I'm also a big science fan. So Google right here. Alphabet Class A. I don't track this. I'm looking to buy a couple of stocks, but that's how much I have invested. It's my return percentage of a portfolio. And let's see here. Dogecoin, Bitcoin, 1%. Oh, 1.5% of my portfolio. You can see right there, total return $433, which is crazy. I think I bought, oh, there it is, $156 of Bitcoin. That's how much it's gone up by. I have another account on Cash App, but I only have about $75 in there. So let's see, what else? And then Litecoin. This one, I started seeing that Litecoin is pretty similar to Bitcoin in its pay structure, but it's a little bit, from what I've seen, it's a little bit better, in my opinion. But Bitcoin is just like the gold standard, and everybody likes Bitcoin. It's got popularity around it. Now, portfolio diversity is 1.48%. Total return $414, 276% return on investment. All right. Once again, guys, for all you guys that want to invest, all right, so this is at the beginning of the year 2020, right? As you can see by the date, I was doing pretty well, doing well. It was up like $800 as soon as the coronavirus hit. Look at that, down 600. It was like 700. I think the height of it was like almost $8,000. My portfolio size was about $13,000 at that time. Well, whenever at the bottom of this peak here. And let me tell you, I was a little bit scared. I was worried. And I was doubting my skills as an investor. And I read a couple financial books at this time about investing and stuff like that. Peter Lynch's book, Beating the Street, and The Richest Man in Babylon. And, you know, I already had some experience losing out in the stock market before, and all the investments that I sold were worth more like a year later, and I realized I just had to hold it and just keep on pushing through. And if I would have never pushed on through, I would have never had this number. All right, I would have just stayed there. I'm not saying that you have to push on through with every decision that you make in the stock market, because you will lose. You will lose sometimes. It's inevitable. But just saying, just don't give up easily. Okay?